Today, the chair of the Federal Reserve says he does not see a recession this year. Speaking in Washington, he repeated what he told investors last week, that the central bank will be patient when it comes to raising interest rates. But he also said something else that caught our attention. Here's Steve Liesman.
In his third public appearance in the past month, Fed Chairman Jerome Powell sat down for a chat with private equity mogul David Rubenstein and tried to ease market concern over the rate outlook. Powell suggested the Fed is in no hurry to raise interest rates.
I think we're actually in a good place. I think where that leaves us, particularly with inflation low and under control, is we have the ability to be patient and watch patiently and carefully as we see the economy evolve.
The Fed chairman repeated that he sees the U.S. economy as strong and expects momentum from 2018 to carry over into 2019. His biggest concerns, weaker global growth, trade tensions, and an extended government shutdown. But markets sold off during Powell's comments, though several factors were in play, including a soft 30-year bond auction and a tweet from President Trump announcing he would not be going to the Davos World Economic Forum this year because of the shutdown. But some pointed to Powell's comments saying the balance sheet will be substantially smaller than it is now.
We wanted to have the balance sheet return to a more normal level, which is a level no larger than it needs to be for us to conduct monetary policy. Don't know the exact level. That will depend on really the public's appetite for our liabilities, specifically currency. To us, that's a liability, and the public has a large appetite for currency, and also reserves and other liabilities. So it'll be substantially smaller than it is now.
Investors are watching what the Fed does with its balance sheet because of its potential to raise interest rates. The average market expectation is for the balance sheet to decline to around $3.5 trillion from the current level of $4 trillion. Investors, though, will have to wait until the next public appearance or press conference by Powell to find out what substantially smaller means. For Nightly Business Report, I'm Steve Liesman.